So the US dollar has had a very difficult start to 2025. First 6 months of the year, the dollar index fell by a very extreme 10%. Now, there are three key reasons why the dollar is so weak. First is, of course, that investors are starting to question the exceptionalism of the US economy. President Trump has, of course, launched an intensified trade war, not just against China, but against practically every other country that trades with the United States. So every country is now realigning their trade supply chain and trying to reduce their dependency and use of the US dollar. Second, central banks across the world are starting to reallocate their reserves away from US treasuries, away from US dollar, to more predictable, safe haven assets like gold. And third, investors like you and I are starting to hedge the risk of weaker dollar to minimize the damage and the losses to our returns and our investment. So our house view at UOB is firmly negative on the dollar. Investors should do two things. One, they need to look at hedging this risk of a weaker dollar. Secondly, there are ways to position to take advantage of this flow away from the US dollar into emerging markets and Asian markets as well. So for interest rates, it is a very interesting time where we have different drivers pulling interest rates in opposite directions. The US Federal Reserve is expected to cut interest rates in the months ahead. Now, in the longer dated Treasury bond yields, this may be sticky because investors are starting to get worried about the long-term fiscal debt of the United States. Back home in Singapore, the 3-month compounded SORA has dropped below 2%, and this is a full 1 percentage point lower than where we started at the beginning of the year. And this is a very positive sign of the strength of our Singapore economy. So having said that, the SORA rates are expected to stay soft, but we don't think SORA will go down to 1 or 0%. Investors need to continue to exercise prudence and discipline in their borrowing. Now, for commodities, we think gold will shine brighter because of all the key positive drivers like safe haven buying, strong retail buying, strong central bank allocation, and of course the weaker dollar